Good morning. Welcome to the B.F. Anderson Trend Following Report for August 29th. As you notice, I say trend following. You know, it's important that we understand trend following. Prices tend to trend, and it has a lot to do with human behavior. You know, once a price starts to improve, more people see the improvement and follow suit and follow the trend. Whereas trends start to deteriorate, that same thing happens. So let's get right into the charts and try to figure out the trend of this market. Well, unfortunately, we are in a correction and we're moving sideways at best. This is basically a correction with a sideways trend. So what I'm finding right now is just a lot of stocks are basically stuck. We're not really making any progress. What we want to see here, and when we study trends, you notice here that we broke below the lower moving average because we use moving averages as a way to determine trend. So when a trend is broken, this is a broken trend, then we want to look for what we would call a violation. So basically the way I would look at this is that we broke the trend here. Now we would take that low, which is an intraday low for the NASDAQ. This is the NASDAQ we're looking at. Now, what we want to avoid is something called a violation, which is where you break below the intraday low of the day of the break, or where you made your major low. So far, we have not violated the trend. We've only broken the trend. Now, another way to look at this is on a weekly basis. You can see here that we did, break down, but we never broke below the 35-week moving average. And the 35-week moving average is holding, and the 35-week moving average is in an uptrend. So what the rule would be here would be that if we violate, which means we break below that weekly low and stay there for 2 weeks, 2 consecutive weeks, that would be a violation. So far, that hasn't happened. So we're somewhat on the fence with the market. We're not saying that this is a bear market. We're saying that this is a correction with an ongoing uptrend. Now, I'm going to talk a little bit more about advanced decline here in the video, but you can see here the advanced decline line has basically flattened out. On the high-low index, now this is the number of new highs divided by the number of new highs plus new lows. When you start to see very few new highs and a bunch of new lows, this line is going to go down. Well, it rallied, has pulled back this week, so we need to see some improvement there. Now, on the high-low index, now remember, this is called the leaking boat indicator. In other words, if the market is doing well, let's say the indexes are doing well, but at the same time you're getting more than 40 new lows a day, it just tells you that you need to be a little cautious here. Yesterday we had 162 new lows. As you can see, new lows are elevated, so somewhat of a warning. However, on a long-term trend basis, we use the 10-month versus the 20-month moving average. We're in pretty solid shape here. Would like to see the moving averages kind of spread out and become more like this because they are somewhat compressing but not crossing. So far the long-term trend looks positive. Now, the other thing we want to talk about today, later in the video, will be fear and greed. Fear is a powerful emotion. Greed is even a more powerful emotion. So you have to realize that when people become extremely fearful like they are now, it's kind of like the horses out the barn. We're hearing the media right now talk over and over again about the yield curve inverting and how this is a recession indicator. And like I said last week, I've never known a recession to be advertised. And there's another point to be made. Recessions are kind of a boom-bust cycle. So you usually have a real big boom and then you have a bust. Like you could go back to 1954 with the market starting a major rally that didn't really bust or make a top until 1966. Then we had the 1970s recession, which didn't bottom until around 1974, 1975. So usually before a recession, you've got a strong booming situation that basically busts. I'm not seeing that. I'm not seeing it at all. And with that much pessimism that's out there, it's very hard for me to say that this recession is coming anytime soon. We may be 2-3 years away. Now, on the other moving average, which again, we're trying to identify a trend here. I've got a 200-week moving average here. This is the S&P 500. Again, we're making higher highs and higher lows. The trend, the long-term trend, continues to be positive. Now, this is the most difficult part of trend following, trying to determine why is it that the value line geometric is not uptrending. Now, like I said, back here in 95 through 2000, it uptrended dramatically. So if you get this index going, I think that's really going to be a strong sign, but it's just not happening yet. And I think the reason is like we go to the global Dow, which is international stocks. Worldwide, things are not good, especially in Europe and Asia. So we're seeing, just very trendless international stocks. As you can see here, the global Dow is just going nowhere. Now, back to the advanced decline line, and just a way to understand the trend of it, because the day-to-day movements of the advanced decline line are not as important as the overall trend of the advanced decline line. So in other words, we want to see on an ongoing basis more stocks advancing than declining. And this again goes back to that value line geometric index. We're just not seeing that many stocks that are doing well. But the advanced decline line is very healthy. I've got here a 50-day advanced decline line moving average. I've taken away the indicator itself and just replaced it with the advanced decline line, which is 50-day. Very strong uptrend. Here's the 200-day. Very strong uptrend. So long term, the indicators are positive. Now back to fear, greed. One of the ways that you can look at this is that the way to measure fear, greed is actual prices of certain assets. Now gold, which is GLD, is a fear asset. When people are fearful and worried about the banking system or worried about their currencies, they buy gold. Now, what I've got here is the S&P 500 compared to the price of gold. And as you can see, as the line goes down, stocks are doing worse than gold. And you can notice here, when we got into the big bear market of 2018, where we had the worst December in history, you can see where the ratio got. It got down here. We're back down there now. So there is so much fear out there that it's kind of hard for me to say that we're going into recession, because it's already been discounted. Now here's another fear index. People buy bonds. This is the bond this is Treasury bonds versus the S&P 500. Again, the same scenario. Bonds are doing better than stocks. When this ratio drops, bonds are doing better. Well, you can see we're already back down to that same fear level that we got down to in December. And the thing about December, January of this year, the market put in a bottom. So this is kind of where bottoms are made. Now, let's get into the top 5. These are the strongest stocks in my database. This is a biotech company, a new name I'm not really that familiar with, Allakos. You can see here, big gap up on their earnings announcement, another gap up, and then another gap up. Now we've got a flag formation going here. We should keep an eye on it. This is Enphase Energy, a name that's been on the list for quite a while now. We got the big gap up. Now we've got an ascending flag formation, but you must note that the stock did close below the 10-day moving average, but it still looks very healthy. Roku, this has really been a very strong stock. Now what we're talking about here is media. There's a report that came out just this week that basically says that Roku is growing faster than Netflix at this time of their cycle. Now, Roku is projected to have 80 million subscribers. Now, another thing to notice about this stock, it trades roughly 10 million shares a day. Now, one thing to look for when you're looking at companies is this an institutional grade type of investment? Because I can tell you right now, the institutions are not going to get involved in stocks that have low liquidity, because one of the problems with these billion-dollar funds is that they can't invest in things that have liquidity risk. Well, this is a very liquid name, and you can see here how well the stock has been acting. It hit an all-time new high just the other day on a very above average volume, almost 20 million shares. Stock is very strong. Shopify, another beautiful pattern. You can see here, very steady. What you look for now, this is the 50-day moving average, this is the 10-day moving average. What you're looking for is something called porosity, which is, does the stock seem to be porous around a certain moving average? Because this moving average then becomes your guide to tell you if there's something extraordinary going on. In other words, if the stock has been holding its 10-day for an extended period of time and then suddenly breaks that pattern, it could mean something has changed. But like with Roku, you didn't get the violation. You got a return back above. It's just porous. That's all it is. So this is hitting new highs as well. Looks very strong. Here's a new name on the list. Announced really good earnings the other day. Target. Gap up on very heavy volume. I mean, this thing traded over 40 million shares. Normally trades 5 to 6 million shares a day. Major gap up. And now is forming a flag formation, but it did break out to another new high yesterday. So Target does look interesting. So all in all, what we're trying to do here is we're trying to determine, is this a healthy market because the trends are up? Right now they're not up. What we're seeing right now is a sideways move. This is not anything to be too concerned about, but we need to keep a close eye on it. Thank you very much, and call me if you have any questions.